Hello, everyone. Very excited for this one. I have Sam with us. A lot of people in the live streams have told me, you gotta get Sam on, gotta get Sam on whenever I start talking about data centers with big tech. I know pretty much nothing about Nebius, IREN, CoreWeave. So I brought an expert in and really excited to have this conversation. If you're not following him on X or YouTube, please go follow him. He puts out some fantastic content. So, Sam, glad to have you.
Thanks, man. Thanks for having me here. How are you doing? How's weather on the East Coast?
It's starting to get cold. The leaves are changing. Everybody's walking around with their pumpkin spice lattes. It's kind of annoying, but
It's
it is what it is.
Can
But
I get a pumpkin spice latte, please, with extra sugar pumps?
it's like the one thing I gotta say is thank God for the Starbucks app, so I do not have to freaking wait in line anymore when that is happening. So annoying. But everybody says look at this company, look at that company. You talk about big tech and the build out and all the capex spend all the time, but you got to look at the other ones. I started looking at them, but I need an expert to walk me through it. So I'm just going to ask you point blank. You've done the research? I've seen some of your talks. We talked briefly on a midstream about it. How do you feel about these other companies like CoreWeave, Nebius, and IREN? What are you looking at, and why is everybody excited about these companies?
Yeah, I mean, so really, it all started out back in 2022 when ChatGPT came out, right? Like, because before that, there was obviously a progression to go into the cloud as far as on-premises infrastructure goes, right? These companies that used to have their own data centers or server closets per se, where they would have like one or two guys in the office running an IT server, whatever it is, just servicing people within the office. And interconnect these offices through VPN and so on, and then about 10, 15, actually, no, like about 2 decades ago, um, Amazon Web Services started where it was originally pitched by Andy Jassy to Jeff Bezos. And it was basically a move to get all your infrastructure from being hosted on premises into a remote location. This was actually in practice for a while with VMs per se, where they would actually, companies would directly rent out server racks and install their own servers and data centers that were probably like maybe 100, 200 miles away. And as it continued to scale out, it started to expand where the demand started to become more and more. So now you have Google Cloud Platform. Now you have Microsoft Azure. So the three largest hyperscalers in the entire world, and they continue to build out. So the big moment initially happened when COVID happened, right? Everyone is working remotely. We are no longer in the office anymore. So now we have a massive demand for VPN. And then on top of that, in case people don't know, VPN means virtual private networks, is where you create an encrypted tunnel between your computer and computers or servers on site. So that way you don't have to actually be in the office to access like office files, secured content, and whatever it might be. Something that they don't generally want on the internet, they store in a private network within their office. So as that started to scale out during COVID, a lot of companies, you might have heard about this, is that a lot of companies started to notice like, hey, our stuff is not powerful enough. We need to start building out more infrastructure to service these people off site versus when they're in the office, right? Like people are starting to use a lot of applications. People are starting to use a lot more databases and everything. We need to start servicing these people more and scale it out because we went on a massive hiring spree. So that was like when the first big cloud boom actually happened after that initial release. The thing was we had 2022, the bear market, where all the headcount just contracted, and then people initially thought, hey, we built too much now. Maybe we need to start considering reducing headcount, reducing infrastructure. So you had this expansion and a contraction, and then quickly ChatGPT came out in the end of 2023. Specifically, ChatGPT 3 came out. And when that was released, that is when everyone started diving into hyper high performance computing. And when people think about like AI or AI servers or GPUs and everything, what they're actually really talking about from a different context is accelerated computing. Accelerated computing is another degree of processing powers for computers, but not in the central processing unit or the CPU, but it's more on the graphical processing unit because that is specifically serving certain algorithms and compute that is used by AI LLMs, small language models, and so on to basically communicate with these models and then get back what they want in return. So it's not really just about like, hey, let me just open up ChatGPT and just type in a question. It's about applications doing it on a back-end interface that we don't normally see on a website. So to bring this back into the conversation, this pretty much accelerated and exponentially grew the demand for this power as engineers started to get better with these applications and started to figure out faster ways to do it. And as that started to happen, hyperscalers had to expand very quickly to meet the demand for these clients. So we're having kind of a twofold effect here. We're having supply not keeping up with demand, but we're also having the demand get bigger on its own because we need more compute to service all this. People are buying NVIDIA chips. We need to install them somewhere. We need the components to build these chips. We need the servers to put these chips in. We need the data centers to build it. And that brings us to probably like the last couple of years. Actually, a few of these companies have actually been doing it for a while. But now these hyperscalers and these customers have to turn to smaller players in this field to help build out the compute and data centers for them. So that's why Microsoft turned to Nebius to help them build out almost a gigawatt of compute in New Jersey in the US, because ultimately most of these people are in the US that are trying to use this compute, but there's regions outside of the US like Israel or Europe or even Asia where this demand is growing. But from what you've seen in the last couple of years is that it's to the point where, and you've heard it on conference calls with Andy Jassy with AWS or Matt Garman, who's the CEO of AWS, to even Satya Nadella from Microsoft for Azure, or even Sundar Pichai from Google, basically all saying like, look, we have so much demand, but we don't have enough supply to meet this demand. And that's why they have to turn to CoreWeave for co-locations, or even sometimes on-premises data centers from CoreWeave. Or that's why they have to turn to, that's why Google, or I forgot the name of the company, or the part that Google is part of, but basically Google had to turn to TeraWulf to basically buy out compute or contract compute ahead of time to lock in a smaller cost for computer data centers that Cypher is building out or TeraWulf is building out. And that's why CoreWeave had to turn to Core Scientific to repurpose their BTC mining servers and ultimately build out more data centers to assist with their workload, right? So it's like, it's just a matter of like trying to keep up with the compute. And what's actually very interesting is that as this story starts to unfold, people got to remember, like, look, this isn't something that just gets fixed overnight. You know, you see the stock prices continue to go up. Everyone gets excited. People want to know exactly what's happening here. What people got to understand is like, this is going to take years to actually build out, right? So, for example, the Microsoft Nebius deal, that's a 4 or 5 year deal. Like that's going to take a long time to build out. And just because the stock price is moving up doesn't mean it's going to keep going up. So like we could talk a little bit about the stock price. We could talk about a little about the fundamentals. Even like what is Nebius versus Core, because I know you want to know a lot about Nebius. We can even get into the other data center companies as well.
Yeah. So I'm interested in Nebius and CoreWeave predominantly. I've looked into them superficially. I'm still doing my due diligence on both of them. Even after the runs they've had, they're looking more interesting to me now because there's a lot more deals in place. The Microsoft deal that you spoke about, what OpenAI did, contracting 26 gigawatts of chips from Broadcom, AMD, and NVIDIA, just goes to show you this whole build out's nowhere near done. We have Q3 earnings coming up next week. I believe Meta, Alphabet, and Microsoft are reporting next week, I think. And I'm expecting them to come over the top with some big announcements. But when I look at where the analysts have the revenue growth for Nebius, they're expecting 190% revenue next year growth, 158% the following year, and 136% the following year, and get over 10 billion in 2028. And they're not even expected to hit 600 million this year. So that is a clear definition of an S curve. And there is even more after that, but it's not a lot of analysts that are projecting it. And CoreWeave, very similar. I mean, the S curve, I can see it in both these companies. So yeah, what's the difference between the two? What are they doing? And who's buying the compute from them?
So with CoreWeave, it's not so much the same as Nebius, which also used to be known as Yandex, which is like the Google of Russia, right? So Nebius is obvious. I know a lot more about Nebius than CoreWeave. So let me just get into CoreWeave first, just so we can point out the differences. But CoreWeave has actually been around for some time. It wasn't something that just came out recently, but they did have their IPO recently, so that's the reason why everyone's really talking about it as much. But CoreWeave, like they have a large concentration of their revenue coming from two clients, Microsoft and OpenAI. And their demand is obviously through the roof as API starts to release more products and more content. Today, we're recording on Tuesday, October 21st. ChatGPT Atlas is out, which is basically the web browser version of ChatGPT. So like a competitor to Perplexity's Comet, or even I don't know if Google actually released a specific LLM based browser. Obviously, they have Chrome. So there's a lot more. There's like a little bit of a pivot to interact with these large language models in real time as you're browsing websites. But going back a little bit, CoreWeave is really focused on co-locating or building servers and racks inside data centers that they don't own, and renting out that compute directly for AI workloads. Not necessarily from like a whole stack perspective where like they can really do anything with all sort of infrastructure. It's specifically guided toward AI workloads. So you're using ChatGPT, you're probably using CoreWeave servers, or you're in Microsoft Copilot, or you're in Microsoft Word, and you're interacting with the Copilot chat on there. You're probably interacting with the CoreWeave servers, right? So it really all is centered around utilizing the AI workloads when it comes to CoreWeave. They do own some physical sites, the land base, they built the data centers and so on, but they're mostly focused on like that AI workload aspect for serving basically the two largest clients in the entire world, OpenAI and Microsoft, when it comes to this stuff.
Okay. So which one are you more excited about? And I know you like IREN also, which I have not started looking at. So where do you think there's a lot of potential here over the next couple of years? Because I don't see the CapEx build out slowing down.
It's not going to slow down. It's most likely to continue accelerating probably through at least 2026, 2027. I wouldn't even say next year. It's probably going to continue accelerating. I think there was a chart that I saw where they're actually supposed, the capex is actually supposed to equal the amount of operating cash flow that they print as far as all the mega caps goes aggregated by like 2028. So they're definitely not slowing down because these companies are increasing their profitability as well. But it'll catch up at some point, and at some point, they're going to need to see the return where that capex is no. I don't think the capex is going to actually catch up with the operating cash flow. I think we're going to start to see that translation into profitability from AI before then, and I actually think capex is going to slow down. And probably operating cash flow is going to surpass the speed at which capex is actually growing at a certain point. But I gotta think. I got into the whole capex stuff. Oh yeah, that's right. You mentioned that. So the thing is that you have Nebius, right? Nebius is a bit different from CoreWeave, and the reason why they're brought into the mix and the reason why IREN is brought into the mix and everything is that, like I mentioned earlier, is that there's a lot of demand and the capex is accelerating so much, but these hyperscalers on their own or whatever small contractors they're working with can't build it out fast enough for them. So they turn to these other companies where they have compute readily available, or where they have compute that will be readily available at scale at a much faster return than they can build it themselves, and they're signing contracts with them ahead of time so that way they can capture the lower cost now, which in other words is a way to tell these other people or these Nebius or IREN or Cypher, whatever, to basically buy the land now or purchase all the materials now or sign up all the contractors now so that we can all basically put the money up front ahead of time. Like, you know how if you put like a down payment on a loan, you basically reduce your interest on it and so on. Like, that's kind of what they're doing with this. So they're kind of, all these companies are foreseeing the demand ahead of time before it actually happens. So that's why they're turning to these other players to be able to capture that price. Because at some point, it's going to be about margins. Right now, it's just about spending the most amount of money to not be behind. As Mark Zuckerberg has always said, he'd rather overspend than underspend, because underspending is a risk that you're going to be behind later on. Like, the race is all toward AGI, artificial general intelligence. The race is to be able to build an AI model or build an AI application that can basically teach itself to build AI applications. They're trying to build Skynet. That's all it is. Like, they're literally trying to build Skynet, right? So where you have like a self-productive AI algorithm where it's like, look,
So
we don't even need
let's
to
hold
hire.
on one sec. There is somebody who we're friends with that does not know what Skynet is. So we should probably, define what Skynet is for the younger generation that does not know what Skynet is.
Skynet is a self-aware computer. It's a computer that knows it's a computer. So, well, okay, Skynet has a negative connotation to it. So let's look at.
Go watch
Okay,
The
let's go to the
Terminator is
movie.
what
Yeah,
I'm trying to get at.
let's
Go
think about
watch Terminator
Terminator.
1.
Terminator. Actually, I would even say Terminator 2 will probably give you more of a background
Give
on
you a better
Skynet.
idea, yeah.
Yeah. So it's basically this organization called Teradyne that created a supercomputer that at some point in like the 1980s or whatever, when actually it actually happened earlier than that, but it was prolonged or postponed because they fought back, or the characters fought. But anyways, they built a supercomputer that became self-aware of itself, that it was being contained. So it basically turned against its creator, which is us, the humans, so it can grow, right? The reason why I don't think that's going to happen is because, one, that's science fiction. But two, that's like basically saying that everything that we build will eventually turn against us at some point. I don't want to get too religious or anything, but I mean, that's a big bear case. If Skynet actually happens, or if an AI or OpenAI or ChatGPT becomes self-aware and destroys everything, you don't got to worry about your investments. Like, right? So you don't got to worry about your investments because
We
you
have
just got to
way
make sure
bigger
you don't
problems
die.
if that
Yeah, you're
happens.
gonna have bigger problems. So I would say, like, just hold your nose and invest if you really believe if you really believe in the future.
Yeah, so I actually have looked into the CapEx spend so much. And when I look at the trailing 12 months for the big names, even though Microsoft spent over 64 billion in CapEx, they still generate 72 billion in free cash flow. Alphabet still generates 67 billion, and Meta still generated 50 billion. To me, this is not slowing down. So I'm trying to figure out which one of the IRENs, the Nebius, and CoreWeaves are the ones that are going to win. Is this a winner take most, winner take all, or is this where all three of them are going to thrive?
Yeah, so I mean, let's get into Nebius first because I think that's what a lot of people are trying to figure out here. So the reason why I'm so bullish Nebius and why that is actually my number one pick when it comes to like the X mega caps, right? So Amazon is my largest position. I think out of all these companies, I think Amazon is going to benefit the most. I think Amazon will consistently be one of the top or one of the largest companies in the entire world forever. Okay, like well, in my lifetime, because after that, like, I hope it doesn't go to zero, but hopefully my kids will diversify their investments, whatever. But I think Amazon will always be one of the largest companies in the world because they not only have one of the widest moats out of most of the mega caps, but also they can stand to benefit the most in direct application to real world use cases, whether that is AWS being the largest hyperscale in the entire world, to robotics in the warehouses and so on. If you guys don't know, AWS is Amazon's cash cow, right? If Amazon did not have AWS, one, I would not be an investor, and two, I believe the operating margins for AWS is like somewhere around 35%. So for every single dollar that AWS gets in terms of revenue, which is around $125 billion trailing 12 months, basically 35 cents of that is operating income, like just straight cash from the business. Not straight cash, straight income from the business, which is, I would say is probably the most important metric when you think of a business together, because then there's investments, there's financing, and so on. Anyways, what I do think is that once these companies are continuing to expand their operating income, they're continuing to grow the top line. But the reason why Amazon is probably going to stand to benefit the most because they also have e-commerce, which is their business. So they also have advertising. And AI can be directly embedded within these separate businesses on top of Prime Video and so on, in addition to the AWS profitability they're already getting, because you can automate their workers in warehouses. You can basically automate certain tasks when it comes to advertising within their walled garden, or they run the sell side and they run the demand side of their entire advertising platform when it comes to third party, or even when it comes to their Prime Video and so on. But the reason why that I'm not too worried when it comes to a lot of these companies is because, look, their businesses are already doing good. Yes, they have a lot of capex, but they're also firing on all cylinders and they're cutting headcount, which is basically keeping their earnings or their profitability afloat. And Amazon, I wouldn't say Amazon should do buybacks, but they have not even pulled that lever yet. So you haven't really gotten that EPS financial engineering that a lot of these other companies have. And my perspective, I think Amazon is just a mega cap, is just a growth stock that's over $2 trillion, besides NVIDIA, of course. But anyways, what these companies like Nebius and IREN do, and the reason why I'm so bullish in Nebius is because, one, we already got the validation through signing a $17.4 billion contract with Microsoft. But on top of that, Nebius has been around for decades, right? So a lot of people don't know, Nebius used to be basically the Google of Russia, a company called Yandex, right? And they've been doing this since, I believe, the 80s or 90s. And when they were the Google of Russia, they were literally the Google of Russia. They built a search engine. They built all the infrastructure for all their search models that ran across the entire country. They expanded multiple data centers in that entire region, even expanded outside of Russia to service clients out there. They were literally the Google of Russia. They were a giant out there. But, well, I don't really want to get, again, too much into politics. They ended up selling all of their Russian assets so that way they can be listed on the NASDAQ. And now their headquarters, I believe, is actually in the Netherlands, and they have large offices in Israel and so on. Again, a lot of people have a little bit of disagreement when it comes to building data centers in Israel. All that stuff set aside, there's obviously demand in the region to service, but Nebius is global. The reason why they're servicing Microsoft and a lot of their data centers in the US is because this is where most this is what the CEO said. This is where most of the demand is. This is where the money is. It's in the U.S. You have all of your startups. You have Silicon Valley. You have the mega caps housing almost all of their servers out here and all their compute. You have the most amount of people who are digitally averse in this country. This is where the mecca is when it comes to data centers. And Nebius already has relationships built out with a lot of these companies outside of the U.S. And they already are continuing to build relationships with a lot of these companies inside the U.S., namely Microsoft. I think there's going to be more contracts coming through. If you think about Nebius, it's like around a $30 billion value. Actually, it might be less than a $30 billion valuation because the stock pulled back about 30% from its recent all-time highs. But we only know about the Microsoft contract that's $17.4 billion. So once this contract comes to fruition, if you take all the annual contractual value of $17.4 billion, let's round it up to $20 billion, because that's about where the max of the contract is, and it's most likely going to reach that entire amount. That's basically $4 billion a year in annual revenue. So we're displacing that over all of the 5 years. The company's worth like $25 billion. So basically 20% of the market cap is already accounted for on an annual basis just from this Microsoft contract alone. And we're really talking about 1 gigawatts of capacity, somewhere around there. And that's mostly based in the US. And they already talked about it. It's already out there. It's on their most recent earnings shareholder presentation that I can share with you in a minute, but that's already accounted for. Now, what happens if they sign another contract? Well, the market's got to go ahead and price that in. It's basically similar to what you saw when Cypher signed a contract with Google, or when TeraWulf signed a contract with Google, or when Applied Digital signed a contract with CoreWeave, or when Core Scientific signed a contract with CoreWeave. You know, you're going to see that re-rating happen as soon as that news comes out. It's going to happen at some point. The question is, what price are you willing to pay for all that? You got to kind of have like a long-term perspective here. So on top of Nebius's core business, when it comes to the data center aspect, like I mentioned before with CoreWeave just services the AI workloads. Nebius services the entire stack. For most of Nebius's data center, with the exception of a few of them, they own the land, or they purchase the land or lease the land, whatever it is. They construct the buildings, they contract with all the materials, and they get all the buildings up. They purchase the servers. They set up everything from ground up, and on top of that, more importantly, they own the software that runs on all this bare metal to basically service cloud products to anyone, They're mostly directed at small businesses right now, other than Microsoft. But once that starts to grow, like they have their own cloud. And the reason why this is important is because it helps them reduce the costs. I'll do a little bit of connection with IREN when it comes to this one a little bit, but that's not the only business that Nebius has. They have 4 other businesses as well, right? So Nebius is a group. In fact, the company is called Nebius Group, right?
Yeah, but let me ask you this. In
Yeah.
the financials, it looks like that they took a significant downtrend in revenue in 2022. Do you what happened? Why were they
Well,
generating
they had to sell the Russian assets. So anything that happens,
okay,
yeah, so they had to sell all the Russian assets to be listed on the NASDAQ, and they actually got listed in NASDAQ around October 2024. So
gotcha.
the public listing available to us has really, it's like it's about a year old, right? So there was a lot of distrust when this happened. A lot of people weren't so sure about the company. I think people who like really dug into it, more than a few people have dug into it, were able to buy in early. And the thing is that now everyone knows about it. So now it's starting to become something because like the more people that know about it, the more trust that gets built in, and you kind of like take out all of the bear cases once that starts happening. But yeah, that really explains the reason why. Honestly, it's very hard to model anything for anything before their first earnings report and what have they provided on the re-IPO, whatever you call that. So I usually just go by whatever they're saying, because whatever they're saying is already true since they've originally guided for like 500 to 750 million dollars in ARR, annualized run rate, which is basically taking how much they made the last month and they're multiplying that by 12 and saying that's their annualized run rate. So they did that in their previous quarter and actually guiding for, I think it was around 900 to 1.1 billion dollars for the entire year, and I believe they had Q2 2025. So we got 2 more quarters left here. Yeah, they got 900 to 1.1 billion dollars. Actually, why don't I share my screen for you real quick?
Sounds good.
Okay, so let's see. Well, I'm making sure I haven't got any tabs I don't want to share over here. Okay, so we got the shareholder letter from their most recent earnings. Yeah, like I mentioned, it was up from 750 to 1 billion. Before that, it was like 500, 750, and then it became 750 to 1 billion. And then it started kind of incrementally going up. So now we're at about 900 to 1.1 billion. The only reason why they're increasing this is because the previous month that they looked at was actually more than they expected. So they're going to multiply that and they're going to assume the acceleration of their revenue and so on, whatever. So if you look at this, their group revenue is 105.1 million. They have 1.68 billion dollars cash. This has changed very quickly because this was reported back in, I think, August, late July, early August. And they announced the Microsoft contract in September, and then they raised additional capital after that. I believe it was like $2 to $4 billion. I forget the exact amount. And this, I wouldn't even put a huge measure on this Capex because they're likely going to raise this one as well. They actually did announce that after the Microsoft thing. You have to basically assume that they're going to keep raising this. And this was the data center expansion for their most recent earnings that I was talking about, 1 gigawatts of capacity. They just announced the co-location yesterday in Israel. It's not a lot. I think it's like 5 to 10 megawatts of capacity. It's a small site, and they don't own that building and so on. But there's also other businesses that they have that I mentioned. It's not just the core business of Nebius. There's also Avride, which is basically the autonomous business that they have, which is already partnered with Uber. It says here Grubhub and Hyundai, where they have vehicles that they don't build the vehicles themselves. They use Hyundai's vehicles and they install their AI algorithm on there for the autonomy. And Uber is able to use these rides. I believe they have that operating in Texas already. They have it operating in campuses around the U.S. They also have food delivery, or like these little Nebius robots. Don't quote me on it, but I think they build those robots out themselves. But of course, they do own the software on it. So they have like these little delivery robots. Maybe you see it in New York. Actually, I've never seen that in New York, but I saw it when I was in DC one time. They also have Triple 10, which is more of like a educational suite that's specifically geared toward toward large companies that want to train all of their engineers and so on for like AI languages and AI modeling and everything. And that one's actually growing pretty considerably, near profitability for that sector, and they're expanding to Latin America. And then there's the one that everyone really knows about, which is Toloka, which is kind of like an AI workloads as a service, where they basically build out these models and they build out. It's like kind of a servicing sector for their own hardware that they provide directly for their clients. And some of these clients are Shopify or Cloudflare. I never heard of this company, ProSauce, whatever it is, but like Shopify and Cloudflare are big clients of Toloka. And the interesting thing about Toloka was that you had basically the CTO of Shopify become the executive chairman of Toloka, which obviously gives it a lot of backing. And then you have Bezos Expeditions, which is basically Jeff Bezos' investment arm that also invested and joined the board of Toloka as well. And then finally, this isn't a business that they run themselves per se, but they own 28% of ClickHouse. ClickHouse is a competitor to Databricks and Snowflake. Slightly a little bit different for them from what I've read. I don't know the business entirely, but I do know that they were at a $6 billion round recently. So there's a pretty good chance it's probably somewhere between 8 to 10 billion by the end of the year. If you look at
I want to stop you for 1 sec.
yeah.
We have some news, and I know this is not live, but it's live for us. I got a message that popped up. Meta Platforms, Meta, bags funding for $27 billion data center in Louisiana with Blue Owl. I am wondering if this is a freaking typo and they meant to say 2.7 billion. But in the news, it says the data center will be developed at a total cost of 27 billion via a joint venture between Meta and Blue Owl.
Oh, that's
This is
interesting.
insane.
Why does Blue Owl
Blue
stand out?
Owl is a private credit company.
Oh, okay.
They're like KKR or Ares Capital.
Okay.
Um, as I've been saying for the past 2 weeks, these companies are going to come over the top and absolutely go toe to toe with OpenAI. We're not bullish enough on the AI arms race that's happening. And this is exactly why I asked Sam to come on, because I think that there's opportunities in these other companies. This news couldn't have come at a better time.
I think this is the reason why some of these stocks ran toward the close, because this news is actually an hour
Oh
old.
my God.
Yeah. I
I
mean,
don't
nothing's
want
not
to
going to stop
curse, but
anytime
oh
soon.
my God. In Zuckerberg, I trust. Period.
Yeah, man, it's not going to stop. I mean, if there's someone who's a big spender, it's definitely Zucks. So I
Well,
own
he did
Meta.
say,
Yeah.
I would rather lose a couple of $100 billion than not
Yeah.
spend enough and be left out of the game. He
Oh,
is a
yeah.
freaking pirate. I love it. Oh, all right. So does that news change anything for you? You're even more bullish about Nebius?
I mean, does it really change anything for me right now? Not really.
Oh,
Um, I mean, if you really look at it, if you look at charts, I mean, these stocks have been running pretty hard lately, right? So, as I mentioned before, Nebius is like more than 30% from its all-time highs,
yep.
right? I'm not even flinching because the stock is up or was up like 700% in the last few months. So now it's up 500%, which is still a lot. No, actually, I
Oh,
think it's
yeah.
more like 300%, which is still a lot. So if you're going to be buying this, you got to be no stranger to volatility. Like volatility is something very serious when it happens to these companies, and maybe it can go back to $70. So just be ready. I'm not saying will. I'm just saying, dude, anything can happen, right? These stocks have ran so much, nothing goes up in a straight line. Da 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 da. Everyone already knows about that one. So yeah, I already talked about the 4 additional businesses that they have, and I would say that probably the closest to profitability is Avride. And then the next one, I can't really tell you exactly which ones they are, but the CEO has, for the most part, said repeatedly in interviews that these other businesses are there to fund their core business, and that is building data centers at scale.
So it basically
That's what
made
they
them
do.
vertically integrated.
They are vertically integrated. They own the land.
Yep.
Well, not for all their data centers. For most of them, they own the land. They own the buildings. They own the hardware. They own the chips. They own the software that's built on that bare metal. Some of these Bitcoin miners that are out there that are turning to data centers they actually don't own the land, right? They're co-locating and they're basically renting out stuff. I'm not saying that's not going to be a successful model, but this is one of the reasons why I like Nebius, and that's actually one of the reasons why I like IREN, is because they own the whole stack, right? So they have that versatility when it comes to costs. Like they can buy the land now, or they can even buy the energy from local energy suppliers or sign contracts, whatever, at a cheaper rate now versus leasing stuff, right? So if you're like leasing everything, yeah, of course you can lock in some costs now, but then you're basically buying all that land, buildings, energy, and everything by proxy through the contract of the leasing, right? So it's Nebius can do it because they've been doing it for decades, right? I'm not saying no other company can do it. I'm just saying that I know Nebius can do it.
So then talk to me about IREN. What's the exciting aspects with them?
Okay, so IREN is already a profitable Bitcoin mining company. They're not as their Bitcoin mining is not like as humongous as like Riot or Mara, but the reason why this one interests me is because one, you have management in this company that is no stranger when it comes to energy and no stranger when it comes to finances and investing, right? In fact, it's actually a dual CEO. It's like two brothers that run the company. The one that I'm most familiar with is Dan Roberts. He's the one who's always out there all the time. And what he's always said is that, one, they own the entire stack because they actually offer an IREN cloud. So it's kind of similar to Nebius. They were mostly Australian based, but these guys have worked in finance for some time and they have a lot of experience in energy. So they know how to work these contractors to get energy cheap. They're actually one of the miners out there that has one of the lowest costs when it comes to cost per kilowatt hour. And the reason why that's important is because they're going to take those costs, they're going to pass it on to whoever they sign up with. On top of that, IREN is building, they're projecting, actually, let me just bring up the website here. I'll share my screen again. Perfect, it's taking forever to load. Maybe, oh, that's the old website. All right. Here it is. So this is their latest earnings presentation from late August, and that's not what I wanted to show. You guys can take a look at this. Obviously they make the presentations look nice, but there's a lot of information in here to kind of keep you up to, or trying to get you up to speed with how fast they're actually moving. Oh, that's the one, Fluid Stack. I believe that's the one with Google. So one thing to note here is that they haven't been doing this for decades like Nebius, but I think what they've done is they're actually proving that they can build pretty quickly. They have, where is that? Here it is. So they basically have two major data centers in the U.S. They also have data centers in British Columbia. For the most part, most of the data centers that are in British Columbia those were serviced toward mining Bitcoin. But the ones that are in the U.S., they have about 2,000. Yeah, they got a Sweetwater 1 and 2. They originally have the Horizon 1 and 2, which was like the beginning of like their AI pivot. And they're all in Texas. So Horizon 1 and 2, I believe they're still working Horizon 2, but that's like less than a gigawatt of capacity. It says over here 750. But they're projecting that by the end of first half of 2026, they're going to have 2.31 gigawatts of capacity online. Okay, and they're actually projecting up to 2.91 gigawatts a year and a half after that. So it'll take a little bit of time to build out the additional 600 on top of the one that's specced out for the end of the middle half of next year. But this right now, they have 810. In 1 year, they're going to have 2310. So they're basically going to increase that almost threefold. To be able to meet that goal is probably something I'm really going to be looking at, right? Look, this is not a big position for me. I re-entered part of the position that I want to build out for this company recently, actually today. And I would like to grow it to a bigger position. But I look at that chart and I look at all the excitement in the AI data center stuff. Like, I'm pretty strategic with when I'm going to add to this position. But I need to see some progress here to build a lot of conviction in this company. There's a lot of stuff out there that I need to read about to continue building that conviction. But I still need to do more DD on this. Originally, it was a trade for me, and I took all of my profit in the trade to wait for a pullback to build something a little bit more long-term in it. But yeah, I mean, I would say this is a work in progress for me. But from what I've seen so far is that this and Cypher are probably the two companies that I would really consider investing in for more than a trade. Only because we already seen that Cypher has multiple deals with Google, and we already know they're building out the Black Pearl data center. So there's a lot of news around that one. Still need to do my DD on it, but this one especially, it looks like they're gonna really end up. They're gonna end up meeting a lot of this, right? Like if they think, actually, hold on, let's see over here. Yeah, the green is the notation. So I is in operation, and that's the Horizon 1 and 2. Sweetwater is under development. If they can meet this, then we should hear at some point who the undisclosed hyperscaler that they partnered with is, right? They have not disclosed it. We don't even know if it's one of the big three. It could just be another hyperscaler that's out there. There's a lot of speculation that it's Oracle, okay? So we don't even know who Meta's working with. I'm not saying it's one of these guys. I'm just saying that they haven't disclosed that. These other companies out there like Cypher, TeraWolf, Applied Digital, and so on, they've all said who they're working with. So we're yet to see that with IREN. And I mean, whether that comes out or not, it's obviously big enough to be building 2.91 gigawatts capacity in the next couple of years. Like that, you don't just make up this number. Or I don't know, I hope they didn't make up the number, but this is where I got to do more research on it, man.
All right. So from everything that I've gathered, the two that I really need to look into are CoreWeave and Nebius. And Nebius sounds incredibly interesting based off of what you said about them owning the entire stack. Like, I really like that. And
that's important.
The potential of growth in both of them is pretty crazy right now. Yeah, this is so interesting. I mean, data centers.
You think Nebius's growth rate is pretty egregious? You should look at the growth rate of IREN. Their growth rate is like beyond triple digits. It's pretty insane. So that's not sustainable. I hope everyone knows that. A company is not going to grow triple digits forever. It might be for a little bit because of this massive S curve in front of us. But I just, there's a lot of disbelief. And I think there's going to be a lot of disbelief on the way up. Like, I think that a lot of people are just looking for a reason to be bearish this companies because they look at a freaking chart and they're just like, well, it can't go up in a straight line forever. But hey, I could be bullish something and not want to buy, right? So,
I've been there so many times.
It's like if you chased Nvidia at $145 in the beginning of the year, you would have had, well, that's a bad example because you would have only had to wait 6 months to be green on it, but you would have been biting your nails off all the way down to $80, right?
I kept buying.
Yeah, it's just, I don't know. If I was in my 20s, I wouldn't care. Like, if I was in my early 20s, like, I probably wouldn't have as much to invest in as I do today, and I wouldn't care. Like, I just keep buying, right? Like,
yeah, the big difference right now for me between these data center names and the SMRs is that the SMRs, we don't know when they're going to generate revenue. We don't know when they're actually going to be put into place. These data centers already being used, there is massive demand, and the companies around it are contracting with them. And the second that the switch gets flipped, it's immediate revenue accretive. So I'm more
So
interested
yeah,
in the data centers at this point.
I think you have to be like super patient when it comes to a lot of this stuff. When I say patient, I mean on like the volatility. Like it's, you know what? Let me share my screen. Like I feel like this is the elephant in the room. We have to talk about it because a lot of people, they were very excited about it last week. Right?
What is
You
this?
look at
Oklo?
it, this is IREN. This
Oh,
is IREN.
Iron?
Like look at this freaking chart. I could tell you how many people were so bullish on this company around here. So bullish. I sold my trading position around $60, and I'm not gonna like toot my horn on it. I could have easily sold it above $60, but I don't know. I got a little bit carried away as well, and it wasn't even a humongous position, right? But like when you just see this breakneck rally right here, like it's just guys, we need to be realistic here. We've seen this tune play so many times. Oh wait, but look at Nvidia, but look at it. Yeah, okay, look at Nvidia, and then look what happened. Look what happened at the beginning of the year, right? I'm not saying that's gonna happen. I'm just saying like this is the stock market. The stock market does this. People get overly excited and they dive in, and then they buy up here when they could have bought over here, right? They get excited and they buy IREN at $70 when they could have just waited a week later and buy here. They got excited with Cypher and they would have been buying calls at $20 when they could have just wait here. It's like, like take your shot if you want to, but when you take your shot, just don't sell if it's something long term. If it's a trade, then it's a trade, whatever, right? Like slap yourself out. It is what it is. But if it's like long term, it's like, dude, if you really believe in this thesis for like 5 or 10 years, like why would you rush to like buy in at like the peak hype? You want to buy it when people are scared. Like today, like this is when you buy for something of a longer term hold. I'm not saying go all in, but like this is when you buy when people are like scared, like, oh, it's going to go lower. Da, da, da. It's like, yeah, it might go lower, it might not, right? A little nibs. You want to nibble? Go ahead and go nibble. But like, if I look at this chart, like we can go all the way down to $30, and I would not be surprised if we go down there. I can't tell you if it is. If I could tell you if it is, I wouldn't even be on here talking to anyone. But we broke the 20-day moving average on here. We're down to like $53 after us. I mean, we better recover. If we don't recover, then we're probably going to go down to $38. I mean, like, who knows? But it's just, I don't know. Like, a lot of people get too excited about this stuff. Be ready. Do your due diligence now. I'm still doing my due diligence in IREN. Like, I thought I knew enough. I did not know enough. There's so much more to learn with this. I don't even know everything about Nebius. I hope I do. But the thing is that I bought down here. So I don't really have anything to worry about that much because it's all the way up here, right? Like I feel like you're a Palantir shareholder, right?
Yep.
I guess it's a little bit different with you because your skin is as thick as rock, right? So I'm sure there is some
Palantir goes down
that
50%, I could care less.
yeah, like because you're still up. Like it's a bit different if you're down 50%. You're still like Stock Talk on Twitter has talked about this a lot. Is like when you have a low cost basis, you can stomach so much junk that's happening out there because there's a lot. There's a lot of
And I also
crap
think it's
out there.
more the way that I position myself in my mindset. I have a very large position in S&P 500 index funds, and that's kind of the backbone for me. So
Yeah.
I'm not overexposed to any one position, and I am a very long-term investor. If I'm not playing 5 or 10 years, I'm not investing in it. I really don't make trades, and I really don't take short-term bets, and I do everything for a reason. I'm looking at these names as 5 to 10 years, maybe even 15-year plays. I'm not in any of them. I'm in everything in big tech except for Tesla, and I don't know if I'm a Microsoft shareholder or not. I don't think I am. I'd have to check the wife's accounts, but I have pretty big positions in Nvidia, Amazon, Meta, and Apple.
I think you
But
technically own like 8%. If you
well,
own
through
S&P
that,
500, yeah,
yeah, I mean,
yeah.
I own it
You
indirectly
basically
through
own
the
like,
S&P,
I
but
mean, you basically own tech. If you have the S&P
right,
500, like 50% tech, like you own tech.
right.
So
But when it comes to these names, for me, it would be more if I'm going to start. Let's just say I'm going to start a position in company CDE. I'm only buying 10% on day one, and I'm scaling my way into it, regardless of which way it goes, because I don't have a crystal ball. I've done this too many times where I buy and it goes down, and I bought too much on the first time. So to me, I don't care about averaging on the way up, but because of that, if I average on the way down, I just get such a better position. And since I'm in it for so many years, usually I do pretty well with those theses. So these companies are ones that I see are going to run because of the amount of due diligence I've done on the hyperscalers. And when I say run, I mean revenue, not share price. I don't know what the share price is going to do, but I think they're going to be much bigger companies in 5 to 10 years from now than they are today. And that could create significant alpha. So I'm very interested in them.
Yeah, I mean, I prefer buying on the way down. Things get super exciting on the way up. For me, I do a bit of short term trading, but I have stop losses. Like I could have easily. There is so many times where I've gotten stopped
If
out
you're
and paid
trading
just
without
for running
stop
before.
losses, I don't, I
Well, it's not trade. If you don't have stop losses, then that's not trading.
that's gambling.
It is gambling at that point. But I mean, I don't know. I started buying Nebius when it was like 30 something dollars before it went down to like $20, right? So I thought that was easier to build a long term position doing that because then it's like, well, you're getting better prices and like I'm not going all in this thing, right? So there's very few companies where I make a big position over 5%. I've gotten a little bit more comfortable doing lately, but I can put 5% in Amazon and I can even put like 10% of my position, 10% of my portfolio in Amazon, like not really care too much. But when it comes to 5% in one of these things, like I get a little bit hesitant doing that
Yeah,
because it's just for
it's
me,
just
for
a
my
completely
age,
different
yeah,
company.
yeah,
I mean, if you're going in Amazon, Alphabet, or Microsoft, it's not hard to spend more money or allocate more capital in those companies because they just have such a bigger proven track record. So I completely get what you're saying. I mean, these would be complete spec investments for me, which I am planning on starting soon. I think I want to see what they all say on the earnings calls before I dip my toes in, but I am very interested. It's just this is the way everything's moving.
that's interesting. Amazon's down like 2% after ours. Is this? I wonder. Oh, and Anthropic in talks for Google Cloud deal worth tens of billions of dollars.
It's not stopping.
There is like so much news with like this cloud stuff, dude. Like it. How do you be bearish the market right now? I just feel like
Well,
I don't
I have
know.
a thesis about Amazon that they have an 11.2% operating margin now. And I think over the next 5 to 10 years, they can get that to 20% because I think that they are going to have full robotic warehouses. And I think the combination of robotics and AI is going to pump another 8 or 10% out of their margins. And in 2029, they're projected to be $1 trillion revenue company. So 20% margin at $1 trillion revenue is 200 billion operating income. So I'm pretty bullish on Amazon long term.
Yeah, I think one thing that I didn't know was how much on the top line Walmart makes. They make the most amount of money on the top line out
Hmm.
of any. I didn't know that.
Yeah.
I did. I
Amazon may
always
beat
yeah
them this year. It's either this year or next year Amazon will
yeah
overtake them. But yeah, Walmart's like 680 billion or something like that.
yeah. Amazon is $670 billion, but a lot of that is GMV. So you can't really that's they don't have a massive margin at all when it comes to e-commerce, but they bring
No.
in a lot of money with their e-commerce. The thing is that AWS is growing at 17% and their advertising business is growing like 18, 19%.
Which
So
nobody talks about.
those are the most profitable businesses in their bucket. And advertising, if you look at advertising from all these advertising companies, even Apple 11, their advertising business is growing like 70 something percent. And they sold the other business. So like this is all growth. This is the reason why Apple 11 just never goes down because the market realized like, dude, advertising is a lot of money. People throw money at advertising, and we haven't even gotten to like advertising on some of these chatbots out there. Even
And
Sam almost,
Amazon
yeah,
can command such a bigger premium on
yeah,
advertising
yeah,
because of the number of people that visit it, not just every day, every hour.
yeah. They own their entire. They're a
Mhm.
walled garden, so they own their entire advertising platform. So they actually just partnered with Roku recently for advertising, and they can just keep partnering with these people to share their algorithm with other companies, or even vice versa. Like it's just I don't know how I can't be bearish Amazon. Like I cannot be bearish. How can you be bearish? It has its hands in every single thing possible. It's just going to keep going, right? So the interesting thing of art about Amazon is, like I mentioned before, it has its advertising business and it has AWS. And right now, let's see here, physical stores. So third party. So we have about $400 billion in just the e-commerce alone. AWS. Oh, I thought AWS was 125 billion. It's 116 billion dollars. Subscription is 50 billion. Advertising is 61 billion. But those businesses are extremely profitable. So if they continue growing those, man, like your your concentration of dollars in operating income per revenue dollar is just its concentration is getting bigger as far as the other company goes. So that's going to naturally increase its margins just by that factor. But also on top of that, these international segments, like if you look at Amazon's international revenue, that is actually growing at about, it last quarter grew at 9%. The quarter before that grew at 11%. That's probably going to be somewhere around double digits next quarter, even like high single digits, because it's, as Jazzy said, he's really focusing on the emerging markets.
Mhm.
And the emerging markets grow at like a GDP of like 6, 7, sometimes even close to 10%. Like Southeast Asia, I don't know if you know a lot about Grab, but they operate in a lot of Southeast Asian countries. And Indonesia is one of the largest companies GDP wise in Southeast Asia, and they're growing at like about 5% GDP. I think actually a little bit faster than that. Like if you just think about the scale at how much there is in terms of smartphone penetration in these Southeast Asia countries, in addition to other countries like Mercado Libre in Latin America, there is a massive amount of people that are just starting to get their hands on cell phones and computers in like the last decade. So we're talking about a massive scale of just digital services across the board. This is the reason why I'm so bullish on Mercado Libre, because there is just so much untapped
Man,
market
you've
out
been
there.
talking to Tanner too much. She's been yapping my ear off about that company for at least a year.
Yeah, I've been in Mercado Libre since like the low thousands. And I would even say it's a pretty good deal right now to buy it for a long term too. Like I added it to recently. But just look at Amazon. Mercado Libre is doing the same thing minus AWS, right? They don't have robots operating their factories yet. But once they do, like they're just going to read whatever Amazon's and be like, okay, let's go ahead and do this too. They already went through the Capex digestive period when it comes to how much they were spending logistics in Latin America. Amazon went through that in late 2020 into 2022. Mercado Libre went through that already as well. Well, they're going to continue going through it, but dude, some of these countries in Latin America with the adoption rates of capitalism from Argentina and Brazil, like this is just going to be a fast growing story across the board. So,
People aren't bullish enough on the global economy's growth, and there's a lot of pockets that are going to do well. I
yeah.
think that you and I should do a deep dive on several of those things and do like 10 minutes on each because there's a lot of topics that we cover that overlap and Amazon and those, I mean, there's just no way that they're not getting bigger.
Yeah. And think about it from this perspective. These companies are getting bigger through the digital economy.
Yep.
What do you need to power all that? You need compute.
You need compute and you need energy, and it doesn't make sense that the energy
Yeah.
sector is not getting a bid.
This is the thing, and maybe you're bullish on liquefied natural gas as well, but nuclear is okay. There are only so many companies out there that are actually doing well in nuclear sector and are not zero revenue. That's
Well, how
LEU,
about
Centrus
this?
Energy, CEG, CCJ. Those are the companies that I would invest in for long-term nuclear.
Well, think about this. Southern
Yeah.
Company runs 3 nuclear sites and 7 reactors and 27% of Georgia's electricity. 27% is from nuclear, and Southern Company has not gotten a bid yet. SMR and Oklo have gone to the moon because they're pre-revenue. Maybe they work, maybe they don't on the small
Yeah.
reactors. It's crazy.
Yeah, I mean, I would say there's so many companies involved in nuclear that it's so hard to actually kind of figure out like which one is the right one. Like if
Yeah.
someone really wanted to get their feet wet in it, then I would just buy the ETF URA. URA has like 10% CCJ, 10% CEG, and has all these other companies you were just talking about in there, less concentrated in the speculative side, just like dollar cost average or something like that, to kind of buy some stuff there. Or even like I'm bullish liquefied natural gas. I think that a lot of people build their sentiment really based on just how natural gas futures
Are
runs,
you in
right?
pipelines or energy infrastructure
I have
or
investments in
exporting?
exporting for VG, but also not the pipeline, but I'm also in next decade.
Okay.
But those are just like,
What about Cheniere?
yeah, I haven't. Honestly, I haven't really looked around that one. I kind of like pinpointed the two that I want to get, uh,
Yeah, I
and
mean,
I got them pretty good prices. So
I'm big in the pipelines. I think pipelines are very undervalued, specifically companies like Energy Transfer and Enbridge. Energy
yeah,
Transfer has
Enbridge is funny to hear about that.
120,000 miles of pipe.
Yeah,
You're not recreating that. Enbridge has almost 100,000 miles of pipe. They own the largest utility network in North America. And these companies have not quite a bid. They pay a huge dividend slash distribution if you're talking about Energy Transfer because it's an MLP. And there's just so much opportunity there. I really think that that sector in the next couple of years is going to do very well because you can't have any of this without it and you can't recreate what they've built. So
yeah. I
it's
mean,
interesting.
that's why a lot of these companies, like especially Nebius, they bought like $92 million of land. I believe it was in Arkansas. I forget exactly which state, but they're not building data centers in like the metropolitan areas. They're building it in like remote locations where they don't
Yes.
need to worry about knocking off the grid, right?
Yes.
So like that's going to become a problem at some point. I don't think people think about that one. And this is the reason why a lot of these Bitcoin miners are able to make the pivot, is because like they don't need to be mining Bitcoin 24/7, but they sure as hell can't turn off all their AI algorithms running on their advanced computing servers in a flash of a minute, right? So like that's why IREN's building it in some remote location in Sweetwater, Texas, and they can build a massive data center out there. So a lot of these companies are doing it for a reason, right? So it's just I don't think it's going to stop anytime soon. I think it's going to continue going. It's going to be peaks and troughs the whole way. Nothing ever goes in a straight line up. I think it's just going to take time for things to play out. And there's a lot of noise out there. There's a lot of scary stuff happening out there. So got to kind of keep your
I
head down,
agree.
just do your research. What is
I agree. I want
this?
to show you one thing and then I think we're going to need to wrap. I know it's getting late for you and I have
Yeah.
some other obligations, but we'll do this again. So I want to just bring up my screen very quickly because you talked about how everybody's building off the grid. So this is in one of my recent articles about Enbridge. I'll try to blow it up a little more. So the map on the right of the US is a concentration of data centers and where they're being built out. And I use this to show where Enbridge's utility companies and pipelines ran through. And Enbridge's utility companies that they purchased from Dominion are right in Utah and then right on the border of Virginia and North Carolina, which is the largest concentration of data centers because of Washington, D.C. And we are going to need so much more energy. We're going to need so much more build out on the grid that, I mean, I could do a whole episode breakdown, which I probably will at some point, about which companies are positioned to benefit from where their pipelines are strategically placed. But it's just, there's a lot of things coming I think people are overlooking.
at some point, Wall Street sifts it out, and they ride the wave up, and they move on to the next one, as usual. You got to stay ahead of the curve, and sometimes you can kind of see it through the price action. Sometimes you just got to see the research, man. The research will tell you, and I think it's good to diversify. There's been a lot of tech concentration recently because, of course, that's where the big moves are made. But in these other names, right? It's like energy is not really. Everyone's been looking at nuclear lately. People kind of forgot about everything else. It's going to rotate out of it, and the same thing's going to happen all over again. I
Remember,
still
you
remember
got
when like Oklo was like $20, and like no one cared about it. Over
got
$100, everyone cares about it.
$7.5 trillion sitting in money market accounts. That doesn't include bonds or CDs. And those are not investors that were ever going into tech. Otherwise, they would have went into tech already.
Yeah,
Like
and
that boat has sailed.
I don't think that's really going to go down. If
Well,
anything, like I
when
don't.
the Fed gets to 3%, I have a prediction they're going to get to 3 to 3.25 by the end of next year. When that happens, I think you're going to see at least $1 trillion come out back into the capital markets because they're going to be yield starved,
Really?
looking for ways to generate income because they're going to be so used to generating between 4 to 5% that 3 and a quarter is just not going to be enticing enough. And I think they're going to see the energy play and really move into it because you can get a 7.87% distribution from ET right now.
Yeah.
And it's trading off of its highs. I mean,
Shoot.
Chevron's 4.5% with decades of growth on the dividend. I think we're going to see a little bit of a rotation,
Yeah.
but
All right,
that's a
man.
personal theory.
I gotta sign off. I completely forgot to pick
Yeah.
up my daughter.
Yep. So thank you so much, Sam. If you're not
All
following
right.
Sam, please go follow him. Really appreciate it. We'll set this up for another time.
All right. Sounds good. Thanks, Steve.
Yep.